You may be wondering what it's like to rent out a home that you inherited. You may be thinking, wow, this home's owned outright. Everything will work out perfectly. There's nothing that could go wrong until something does go wrong. So, what are a few of those things that no one talks about that you should know before thinking about renting out a home that you inherited? The first one that we hear is the numbers. So, you may be thinking, well, the home that I inherited should rent out for $4,000 a month and there's no mortgage owned. The HOA is pretty low on it. Property taxes are low, insurance is low, so it should work out for me pretty well. There's a few decisions that have to come into play and a few things that you have to realize about that inherited home. Now, if you're renting out a home in North County for about $4,000 a month, that means $50. It's probably worth about $950,000 to $1.1 million. The really cool thing about renting out homes is that you provide housing for people that couldn't afford it otherwise. That same home that's worth about $1 million, let's say if you had a down payment of 10%, that means that you need to come out of pocket $100,000 just for the down payment portion. Now, that's not factoring in the cost of the loan. That's not factoring in any closing costs. Maybe you could borrow against those, but if you only have 10% down, borrowing against those actually lowers that down payment to closer to maybe 7 or 8%. Now, if you're only putting 7 or 8% down, $70,000 to $80,000, and you're borrowing $930,000, is your payment going to be $4,000 a month? No, unfortunately, it's not. So, being able to rent housing to people provides opportunities for people to live in communities that couldn't afford to purchase one. But there are a few things that you need to watch out for. Keep in mind that the minute that you turn a home into a rental, the property taxes will often be reassessed as soon as they find out that it's no longer owner occupied. Also, your insurance will go up. You can't just keep the regular homeowner's insurance because certain things wouldn't be covered if they find out that it's tenant occupied. So you want to make sure that you have a homeowner's insurance policy that's actually built for a landlord. And this may surprise you because it's not so much like a landlord policy or just a single person policy. It's actually a business policy that you're going to be buying. So if you're used to homeowners insurance being one thing, this is going to look a little bit different. So make sure that you speak with your insurance agent, talk with a couple of them, and look through the options to see how that affects you. The main ways that it affects you on a high overview is your deductible is going to be different on a business to policy. Usually it's much more than on a homeowner's policy. Also, there are varying degrees of coverage. One is bare bones, only cover me if the house burns down to a pile of ashes, and the other would be cover me for things like theft. Now, when you think about theft, it's not so much about the items inside because you're not insuring your tenant's possessions, but you are insuring things like air conditioners, copper plumbing, things like that. If someone decides to come in when your tenant's on vacation or at work, or maybe your tenant themselves, if you found a bad one, decide to rip all that stuff out, move out, and not pay your rent, or worse yet, if it's someone stealing it from both you and your tenant, suddenly you need to replace items so that your tenant can take a shower, cook food, flush the toilet, things like that. It gets real costly real quick. Now, the other thing to keep in mind is that in line with the business aspect of it, this isn't a home that you inherited anymore. The people that rent it from you aren't going to think like, well, this is so and so's mom and dad's place. This is their grandma's home. They're not going to think about that. It's their home to them. They're going to want something that's safe to live. And if a home's been lived in for quite some time, no matter by who, there are going to be different maintenance items that need attention, maybe some items that need updates even. So it's important before you turn a home into a rental to make sure that it's safe for people to live in. Even if grandma or grandpa or mom and dad lived there for 20, 30 years and they were fine, they may know some of the quirks about the home that other people wouldn't notice. They may know the trick that it takes to turn on the water or to get the toilet to flush. These are things that the tenant's not going to know that you're going to have to remedy before someone moves in. And let's say that your parents weren't big cookers, they ate out a lot, Or maybe they just had snacks for dinner. Maybe that stove that hasn't had attention in a long time needs to be replaced or fixed before someone moves in. So you want to make sure that all of those items are taken care of, that it's safe, smoke detectors are in place, carbon monoxide detectors are in place if the home has gas utilities, and also that the roof is safe. There's no places where animals are intruding. And a big one is termites. Many people don't pay attention to termites and termite maintenance to make sure that wood destroying pests aren't eating the home alive while they're sleeping. So make sure that you get that done. Now, California is known as being a tenant friendly state. And what does that mean for someone like you who's inherited a home and thinking about turning it into a rental property? The first thing you need to know is rent caps. Now, this comes into play whether you're turning a home that a loved one lived in to a rental or if you inherited a rental. And it's important to keep in mind, especially if you're inheriting a home that's already a rental. Oftentimes, people have great relationships with their tenants and they're giving them a rent rate that's a favor. Many times, that rent rate that's a favor doesn't really make sense financially in some regards. Maybe there are expenses that aren't fully being covered. I met older people that were charging tenants rent of about $1,500 a month. Their mortgage was $1,300 a month. And they thought that they were making tons of money doing someone a favor and it was a win-win. The truth of the matter was, once you factor in things like the insurance that they didn't take into account, the yard maintenance that they weren't accounting for, and then also capital expenditures. Those are things like those bigger maintenance items that you need to save up for over time, like the roof. Once you factor all that in, it was actually costing this elderly person about $7,000 a year to rent this home to this person. And when you look at things like that, there's a different lens that you need to look at it from. If you're younger and building up a rental portfolio, in some situations, cash flow is not the most important thing. Sometimes it's a really great thing to be able to tie up an asset that's worth hundreds of thousands of dollars for a few $100 or maybe even $1,000 a month. It's not often that you can do that. So if you can, from that perspective, it may make sense if you're a younger person. Now, if you're an elderly individual who's living off of a fixed income, that really doesn't make sense in that situation because you need all of that extra income. These rent caps are limited to 5% plus inflation, but they're capped at percent. That this year inflation is at 2.8%. So that means over a 12-month period, you can only raise the rent 7.8%. Now, that person that was renting out the home for $1,500 a month, if their loved one inherits it and keeps it a rental at $1,500 a month, but they want to raise the rent, they're, number one, not going to be able to raise it up to market value, only raising it by 7.8% in that situation. That home actually should have been renting for closer to $4,000 a month, and you just can't get there. Even if you raise the rent to the max amount for years, it keeps running away from you and it takes a long time to catch up. Also, at that point, you have to look at the rate of return and how the money is working for you. Does it make sense to get that little for a rental property? Or would it make more sense to sell that home and then invest that money elsewhere so you get a better return? If you can get a high yield savings account to pay you 4.5% that never calls you about a broken toilet, but this home calls you about everything that goes wrong, and then you can only get 1,500, 2,000 a month off of something that is worth $1 million, you're not performing at the level that you need to with that money. So the money is just not working for you. Now, this law was originally meant so that people who have to rent homes can't surprisingly have rent raised to an amount that they can no longer afford. The purpose was well intended, and keep in mind, when it goes to rentals, landlords versus tenants, we all need to be on the same page. Landlords and tenants need each other. We should be working together, not against each other. And these solutions are needed by both parties involved. Another thing that people don't talk about when individuals own homes that they rent out is that you're exempt. What does that exempt have to do with? Well, the exemption is when you have different types of eviction. There's no fault eviction where you're just ending the lease. And it's not necessarily an eviction where you're physically having to kick someone out or taking them to court to get them removed. At that point, if you're a single person or a family that owns the home, you're exempt from certain requirements. Like if your family has to move in, there are different requirements needed than if a corporation owned the home. But if you don't tell your tenant that you are exempt from those disclosures, from those actions, that exemption goes away and you're held to the same level of standards as a corporation that owns tons and tons of real estate. Like, think people that own apartments. You're held to the same standards as them, but you're just you. The next thing that many people don't talk about is staying in compliance. A lot of things that happen and that you have to communicate with your tenants and document all goes based on a calendar. Now, that calendar is there to protect everyone and to make sure that things were done in the right order with the right time and giving your tenant the correct amount of time to respond. And if it comes to an actual eviction where you're trying to kick someone out for not paying rent, or maybe they did something that violated the lease, it's important to remember that you can't just walk over there, change the locks, no matter how frustrated you are. You can't go there when they're at work and take all of their stuff out of their house and throw it out on the street and tell them they're done. It's a lawsuit. It's a legal proceeding. And now tenants have even longer to respond. So if you have the unfortunate circumstance where you get a tenant and you have to pay a mortgage on the property and the tenant decides that they don't want to pay the rent anymore and the eviction takes 6 months, let's say, you may have to pay that mortgage for that entire time on your own without any rent. And then hopefully they didn't destroy the place, because if they destroyed the place, then you'd have to repair it as well to make it rent ready again. So it's a huge financial burden that many people often overlook. Not to mention, if you don't pay a mortgage for 6 months, what's going to happen? The bank could foreclose before that 6 month period happens and the eviction is finished. Just because a tenant's there doesn't mean that a home cannot be foreclosed on. The next thing to keep in mind is security deposits. You used to think that you could take first and last month as a security deposit. If it's furnished, maybe you could take another month. Now you can only take 1 month's rent as a security deposit. And in San Diego, if you do have a no fault eviction, you have to. And in San Diego City, if you have a no fault eviction, you actually have to give the person relocation benefits, which equal 2 months' rent. If you owe someone their deposit back when they move out or when you end the lease, you have 21 days to return that deposit to the tenant. California has an implied warranty of a home being safe to live in. So let's say that your tenant makes you aware of a condition with the home that makes it unsafe to occupy. You need to repair that item in a timely manner. And if you don't, the tenant can have it repaired and deduct that from the amount of rent that they owe you legally. They were hoping to stabilize rents. It could also be said that some of these actions that are meant to overly stabilize rents also discourage people from having their homes as rentals on the open market, which actually increases rents because of supply and demand. There's lower supply, there's still demand because housing is hard to afford, whether you're renting or buying it. And truthfully, if you're buying a home right now and you're trying to rent it out, the numbers don't make sense. Because like I said in the beginning of the video, if you're putting 10, 20% down, that mortgage payment is much higher than the rent. It doesn't make sense to have it as a rental. So if you have a rental, be nice to your tenant. If you're renting a home, be nice to your landlord. You need each other. We need laws to keep everyone safe, and we also need them to be in balance so that people want to provide housing for others, because it is beyond important right now. And if you're a person who inherited a home and is hoping to turn the home that you inherited into a rental, thank you for doing that. This area needs housing like you wouldn't believe. And to make sure you're doing things exactly the way that they need to be done, if you own a single family home or a condo, check your exemption notices. Look at California AB 1482 for the exact exemption language so you can make sure that you're in compliance with your tenant. Calendar everything. Make sure you're writing down when you gave notices, when you've done different actions, and make sure that you're documenting every conversation, every bill that's paid, every request that's made by the tenant. It's a business and you got to run it like a business to stay in compliance and to keep yourself safe. Keep in mind, if you're doing a substantial remodel and that's the reason why you need to end a lease with a tenant, make sure that you're in compliance with that. If you're just trying to paint the house and you're trying to kick them out, that's not right and it's not going to fly. You're going to have some problems. If you're in San Diego City, make sure that you're in compliance with certain San Diego specific items, like the 2-month relocation assistance. And you also have to document the no fault termination with the city. This shouldn't have to be said, but make sure that you're respecting your tenant's privacy. Don't just show up randomly. Don't think you could just check on the house whenever you want. If you need to check on something at the house or do a walkthrough, you usually need to give at least 24-hour notice and the tenant needs to agree to it. Handle your deposits by the book. Make sure you document them and have a place to put them. Also, when you're screening tenants, do it fairly. If people have the means to pay for the place to live, don't let some silly reason stand in the way of you giving them a home. If you have more questions or you want to know what it looks like to rent out the home that you inherited and if the numbers make sense or what that would feel like, feel free to reach out. And also, if you want to get rid of all of these headaches, there's a real easy way, and that's to hire a property manager if you decide to rent out the property. This way, there's a buffer between yourself and the tenant, and a good property manager is going to document all of these things and cover you. And they're going to stay up to date on the laws so that you don't have to. You could go live your life, do what you need to do, and not be checking things all the time to make sure that you're in compliance with your tenant. Also, please keep in mind that different generations and different people see things differently. So while these rules are there to protect everyone, some people are going to have different expectations. So it's important to document that and have a clear lease agreement so that you and your tenant are on the same page and know what to expect going forward.